Welcome to Money Love. I'm Faye. Yes, the glasses are back because it's fairly late in the night, and after a point, I just can't bear to keep the lenses on. So we've talked about a lot of things on money. We talked about saving. We talked about investing. We talked about using mutual funds. We talked about your credit history also last week, and we're going to do more episodes. So if there's something particularly you want us to deal with, leave me a note in the comment section, and we'll try and figure out as many answers as we can. A reminder about our partner, Money Love is in partnership with Frio, which is a brand new banking experience. You should check them out. They do a lot of interesting things on the app. It also includes products that will help you save more, that can use your money better, will handle your credit better. So there's lots of things you can do on that app. So it makes sense to check that out. Before we go any further, and this week we're going to talk about how to basically use a lot of these online apps safely, and how to not be a victim of fraud. But before we get there, I want to answer a couple of questions that came in last week. So last week, remember, we talked about credit history, right? About how to manage your credit history better. We got a bunch of questions. A lot of them were about how to access your credit score. If you go to the websites of these organizations and agencies that do your credit history, CIBIL, for example, you go to the website and you check it out. It'll give you a route on how you can take a look at your own credit report, and you pay a little bit of money and you get that credit report. So that's available on all of those websites. Also, the folks at Frio wanted to tell us that they have a product called Fit Credit, which allows you to access your credit history completely free of cost. So that's something you can take a look at as well. Details are at the bottom of your screen. We have a question from Vanisha Nambiar, who said, is it better to pay back loans earlier or extend the repayment benefit and use the money for investing mutual funds or equity? That's a great question. And it's a question that has been asked a whole bunch of times. In fact, it is a question I asked very recently, because you have to keep asking these questions. Is I had some money in savings and I was like, do I use it to knock off a portion of my home loan and bring down what is outstanding? Or do I use it to invest in the stock market? Because, whoa, guys, look at how the stock market is doing, right? It's hitting a new high on a regular basis, completely oblivious of what is going on in the rest of the country. But the stock market is still, galloping away. And I was like, okay, does it make sense to use my savings to sort of invest in the stock market? Or should I be using it to save or to pay off my home loan? And the thing about loans is, and I think that this is sort of an Indian middle class thing, it's sort of, you feel like that loan is like this bhari thing, right? It's on your head and you're like, I just want to be able to get rid of it. I want to get rid of my loan. I want to pay it off as quickly as possible. And that's this idea that sort of sits in your head that you should never have any loans. Right now, the way the banking sector is designed, the way most of us bank, everybody has some kind of loan or the other. But the simple formula that I would use is this, right? Examine the interest rate on your home loan or any loan that you're considering. So maybe you have a car loan and you've got some savings and you're like, should I pay off this car loan or should I invest the money, right? So consider the interest rate you're paying on that loan. And credit cards are also loans. And match that with the expected guaranteed rate of return from your investment. So you'd hope, obviously, if you put your money in the stock market or in mutual funds, that you get like 20%. But that's not guaranteed. It could be 20%, it could be 5%. You don't know. The market moves in different ways, right? So what is the guaranteed return you would get? You'd get the fixed deposit return, which I think right now is about 6.5%, close to 7%. So now you're thinking, okay, if I pay this back, I'm saving interest, say 10%, 12%, whatever that interest rate is. If I invest the money, can I beat the interest rate that I'm paying on this loan? And only if you can do that confidently, then you invest the money. In a lot of cases, you will not be able to do it. Now, unless you're looking at an investment which is, so a lot of times this is another question to ask. You have money in your PPF or you have money in your PF. You've just changed jobs and there's some money in your PF. Should you take that money out and use it to pay your loan? Match the interest rate. What is your PF giving you? Right now, your PF is giving you more than 8%. It's very likely that your home loan will be less than that. Home loans are currently at about 7.1%. You keep your money in your PF. Also, then you consider the tax benefits. PF is tax-free, which means you get all of that money. If you put your money in a fixed deposit, you have to pay tax on that money, plus there's inflation, which is why I know it sounds complicated. This is why you should have a financial advisor who will do the calculation for you and then show you the various scenarios, saying, if you do this, this is what will happen. If you do this, this is what will happen. and then you're able to make that decision. So the formula that I would use, sorry Vanisha for the complicated answer, is to compare the interest rate of what you're paying on the loan that you're considering paying off and what you're likely to get guaranteed from your investment, and then make that call. There is a question from The Earthly Notes, who has said, how does credit score affect major loans, for example, home loan? For one, if you have a good credit score, the likelihood of you being approved for a home loan faster is better. And also, obviously, there are home loans from preferred banks. You might have a bank that you want to bank with, that you're comfortable with. That's the loan you want to take, but it might not approve you because your credit score is low. Then you'll wind up going maybe to a NBFC or a non-banking financial institution, which will charge you a higher interest. So it does, your credit score affects the kind of loan you get, the kind of benefits you get from your loan, the kind of bank you might get a loan from, and the interest rate that you pay. That's how it affects your loans. Sean Pinto says, does maintaining a minimum balance in your account affect your credit score? No, it does not. Your credit score is purely based on your credit, on your loans. So it's only your loan information that is shared with the company that is putting together the credit scores, the agency, and only that information is reflected in your credit score. But if you, for example, happen to be applying from a particular bank, and that bank notices in the history that you don't always maintain your minimum balance, that might work against you. But in your credit score per se, no, it does not reflect. Minimum balance does not reflect. Okay, so I hope that answers those questions. If you have more questions, you know the drill, put it in the comment section, and we'll try and answer those questions for you. Now, let's get to what we're talking about this week, right? We've reached a point, I think demonetization may have sort of pushed us into the waiting arms of digitization of money, but we've reached a point where almost all of our transactions actually happen via either an app or net banking or credit card or something or the other. Very few transactions are still happening, on cash. I mean, maybe your Istri guy is getting paid by cash, but a lot of times that's also, some sort of an app transfer or a UPI transfer or something like that. Very few things that we're actually paying for with cash. But that also means that your money is out there, and it may be more vulnerable to the idea of fraud because of these various ways in which people find routes to sort of get access to your money online. So one of the things that my team and I wanted to talk to you about today is how to sort of be safer with your money when you're using online apps or when you're online. So I wanted to share this one, piece of information. So banks, according to the latest RBI report, banks and financial institutions reported frauds worth, hold your breath, 1.38 trillion rupees in 2020-2021. So that pandemic year, apparently, frauds went up 25% from the previous year in terms of value. Also, these frauds that the RBI is counting is 1 lakh and above. We're not even counting the frauds of less than 1 lakh. And there are different causes, different types of frauds, obviously. Phishing is something that you would have heard of a lot. Basically, fake banking apps that look exactly like your bank, but they're not your bank, and they'll take your details when you key it in. That's something to be concerned about. Your stolen CVV, OTP numbers, skimming. Skimming is basically where there is a little piece of hardware that is attached to the ATM or the card swipe machine, and it makes a copy of the magnetic strip of your card. And they use a camera to sort of figure out how you've keyed in the password, and they use that to sort of take a lot of money out of your account. Like I said, bank logos and, apps that look very similar to what your bank looks like. The other, fraud that happened a lot, and I think there was an OTT special that was made on this, where basically they get a couple of pieces of information from you. They pretend to be calling from the bank, and they have enough information about you to know which bank you're with, which city you're in, and they call you and say, आपका ये SBI में account है, तो आप मुझे अभी OTP दे दीजिए, ये दे दीजिए, and you wind up giving them the OTP, and now they have access to your bank account. So these are the kind of frauds really that we've seen sort of play out. I'm personally paranoid about online frauds and about someone getting access to my account. I'm one of those people who keys in my password like it's an exam, like this, so that nobody can see it. But there are things that you can do. to keep your money a little safer if you're using a lot of apps and things like that. First of all, and this is basic, I know this is basic. I know the younger ones are going to roll your eyes at the older ones saying that, you're just going to put your name and 123 anyway. Change your passwords regularly. Sometimes the bank prompts you saying you have to change your password. It's time, but change your password regularly and make a hard password, which means use a capital letter, use a special character, use numbers. But this is super important. And don't make your password obvious. Don't make your name and 123 or your birthday or something like that. This is what pets' names are for. That is not a secret to my password, FYI. But change your password as often as you can, and try and remember your password when you change it as well. Do not share personal information with anybody over the phone at all. And this is actually a rule. And actually, this is, guys, information. This is also something that you could share with your senior citizen parents, because a lot of times you will not believe that they are specific targets to, to this sort of fraud. There will never be a case when the bank will ask you either for your PIN, to actually physically say your PIN, or say your OTP on the phone. Never. Banks will never do it. It's part of their rules. So if someone is asking you, "Aapka OTP bata dijiye mujhe," or tell me what your OTP is, that is a fraud. If someone asks you for your PIN, to actually share your PIN, that that's a fraud. If there is a case where the bank needs your PIN, they will ask you to key it in on your phone, but they will never ever ask you to say it. So as soon as someone's asking you to say it, that this is a problem, right? Avoid using public Wi-Fi. Generally, people say don't use Wi-Fi, don't use a public computer to access your bank account. Try and do it on your own phone. Or take it off. Don't do it on a public computer at all. Is possible. If you are going to do it on a public computer, use the digital keyboard and not the physical keyboard. Sometimes the physical keyboard can actually remember the buttons that you have touched. Always use a licensed antivirus software. Pirated versions of antivirus software may be available for free, but they do not really protect your computer. So regularly update the antivirus on your computer. Always log out when not in use, whether it is on your phone or your computer or anywhere else. Once you're done using your net banking, make sure that you log out of it. The other thing that I do is I do not make payments out of an account in which all my money is. So my money is in a separate account, and I make my payments out of an account in which I keep a little bit of money at a time. It helps me in two ways. One, I'm able to track how much money I have actually spent and stop when I've hit a certain limit. Also, in my head at least, if someone gains access to that bank account because I'm using it to make so many payments, there isn't a lot that I will lose because there's only so much money that I've kept there. So that's a tip that I personally use, if you find that helpful. In banking, net banking accounts, they allow this two-factor authentication where there's a picture and there's a little tag that you've written and you identify it. That's one of the ways to make sure that it's not a fake bank account, and it's also a way to make sure that you're actually protecting your online banking information. Don't download too many financial apps. Don't share too much information with the apps that you download. Make it a point, if you have a financial app that's not your net banking, check what kind of permissions you have given that app. That's important to take a look at. And this is really important, okay? So even after being as careful as possible, there is a possibility that someone might gain access to your credit card or to your bank account, which means that you need to do a couple of things, right? One, keep track of the messages that you get from your bank. If you notice that you've got a message on a transaction that is not yours, that you've not done, or if you've noticed that you've got an alert of somewhere for what the banks call unusual behavior that you've not done, you need to notify your bank immediately. The bank and the RBI gives you 3 working days within which, as a customer, you can tell the bank that, listen, there's been this transaction that has taken place that I have not done it. And if you tell the bank within 3 working days, it's more likely that they will not hold you responsible for what has happened, because sometimes it's not you. It is the banking system that, has been hacked, or the ATM in which there was, a skimming machine or something like that. So as soon as you notice that there's a transaction that's taken place that is not something something you've done, make sure that you go to the bank immediately and you tell the bank and you prove that this is not your transaction. And if you notice there is a problem, remember, first thing you do is tell the bank. The second thing you have to do is file an FIR with the nearest police station. If it happens to be an online crime, then they might ask you to file an FIR with the cyber cell. But it's important to file an FIR immediately, because that FIR will be part of the proof that you will need in order to get your money restored. And of course, you can always use customer forums and the banking ombudsman as well to get more justice if you feel that your bank is not treating this carefully. One of the things to do, if you're the kind of person who likes to read all the rules, is to take a look at the RBI's guidelines. I'm going to put it in the comments in the description section so you can take a look at it. RBI regularly puts out guidelines on banking frauds and how to look after and how as a customer what your liability is and things like that. So make sure you take a look at that as well. If you have questions on banking fraud, write to us and we'll try and find the answers for you. Even if it's about the rules, it'll be our pleasure to do your homework. That's why we're here. But that brings us to the end of this episode of Money Love. I hope you find it helpful. All right, so remember, this is a show that's brought to you in partnership with Frio, which is a brand new banking experience. The aim is to be able to give you more out of your savings, give you access to good loans and credit, and help you do more with your money. I know you've been really patient recently because we've sort of taken this episode down to about 15-16 minutes, but leave us 2 thumbs up if you think that this is the duration that you're comfortable with. Maybe we can roll up our sleeves a little bit and go a little more in depth on some of the things that we're talking about. And like I said, if there's something particularly you'd like me to deal with, drop that as an answer in the comment section as well. Thank you so much for listening. Remember, if you love your money, it will love you back. Bye.